Elon Musk, and that is the company that made him famous and his fortune. Tesla is no longer his biggest asset in his portfolio.
Shares of Tesla taking some losses this morning, down nearly 6%.
As European Tesla sales have collapsed.
Yesterday, Tesla stock fell 15%.
I want to start with Tesla. I'm leading the Mag 7 stocks lower. Shares.
This was supposed to be Trump's big win, a tough on-trade crackdown made to protect American jobs and put foreign competitors on notice. But instead of hurting rivals abroad, it blindsided one of America's most iconic companies, Tesla. What started as a political power move has turned into a full-scale economic disaster. Tesla's stock is collapsing. Elon Musk is spiraling out of control. And now, the White House is scrambling to contain the fallout from a trade war that's no longer just about tariffs. It's about the survival of an American empire. So how did Trump's plan backfire so badly? Why is Tesla now at the center of a financial crisis nobody saw coming? And most importantly, could this be the moment that destroys Elon Musk's empire for good? What's happening? As Trump's tariff war exploded onto the global stage, Europe wasted no time firing back. The European Union, furious over Washington's aggressive economic assault, launched a counterattack aimed directly at America's most vulnerable export, electric vehicles. And their primary target? Tesla. European leaders imposed new tariffs specifically on American-made electric vehicles, gutting Tesla's margins. But they didn't stop there. Governments across the continent rolled out fresh incentives for buyers of European and Asian electric vehicles, effectively pushing Tesla out of the market. It was a strategic ambush, economic warfare designed to hit Elon Musk where it hurt the most. The impact was immediate and brutal. In Germany, Tesla's largest market outside the United States, sales collapsed by 70% in January compared to the previous year. Across the European Union, the decline was nearly as severe, with sales falling by 45%. Dealerships that had once celebrated record-breaking deliveries reported empty showrooms and canceled orders. But tariffs alone didn't explain the collapse. European consumers had grown tired of Musk's political games, his public outbursts, and his online feuds with European regulators. Surveys in France and Germany showed a sharp drop in consumer trust. Buyers weren't just rejecting Tesla's cars, they were rejecting the man behind them. And while European drivers were turning away, the real crisis was only beginning. Because back in Washington, Musk was about to light another fuse that would ignite even bigger chaos. But before we dive into that, take a moment to like this video and subscribe to our channel. Musk's political games. Ignite a corporate firestorm. Instead of focusing on damage control, Musk doubled down. As European consumers rejected Tesla, Musk took to social media, launching tirades against European leaders, environmental policies, and what he called bureaucratic corruption within the European Union. He openly mocked German regulators, accused French leaders of undermining innovation, and even hinted that European consumers were too soft to appreciate Tesla's bold vision. The media pounced. Headlines across Europe blasted Musk's behavior as arrogant, erratic, and politically reckless. In Germany, newspapers ran editorials questioning whether Tesla should continue operating within the country. In France, major business networks openly debated whether the government should restrict Tesla's market access in favor of domestic brands like Renault and Peugeot. Tesla's political standing in Europe deteriorated rapidly. Inside Tesla's corporate offices, panic set in. Executives warned Musk that his online behavior was creating irreversible damage, but the warnings fell on deaf ears. Musk remained defiant, convinced that his personal brand was strong enough to weather the storm. And behind closed doors, Wall Street was preparing to strike. Wall Street panicked. While Elon Musk fought political battles in Europe and dismissed the impact of tariffs, Tesla's investors began quietly exiting. Throughout the first quarter of 2025, Tesla's stock price fell relentlessly, shedding value day after day. By mid-March, the company's share price had collapsed by an astonishing 53% since the start of the year. The damage was not limited to small retail investors. Major financial institutions took notice. The Royal Bank of Canada downgraded Tesla's stock, slashing its price target from $220 to $175. Morgan Stanley followed suit, issuing a stark warning that Tesla's position in Europe had materially weakened and that the company's long-term growth projections were no longer credible. But the final blow came from the highest levels of the United States government. In an unscheduled press conference, the United States Secretary of Commerce made an unprecedented statement. warning investors that Tesla stock is a risky bet in the current economic environment. The statement was meant to signal caution, but instead it triggered outright panic. Within hours, Tesla's stock plummeted another 7%. Institutional investors pulled out billions. Hedge funds began shorting Tesla's shares aggressively. The company's market capitalization shrank from 770 billion United States dollars at the start of the year to just over 635 billion United States dollars by the end of March. A staggering loss of 135 billion United States dollars in less than 3 months. But when Trump tried to fix the crisis, he made it worse. Vows to buy a Tesla. When a president has to promise he'll buy your product, you know your company is in serious trouble. That is exactly what happened when President Donald Trump, cornered by the fallout from his own trade war, pulled one of the most desperate political stunts of his career. As Tesla's stock price crumbled and the company's European sales plummeted, Trump made a stunning announcement during a live press briefing in mid-March of 2025. Standing behind the White House podium, he declared that he personally intended to purchase a brand new Tesla vehicle. His words were meant to calm the markets and project confidence. Instead, they triggered a wave of disbelief. The president's announcement was framed as a show of patriotism, an attempt to stand behind an iconic American company in its darkest hour. But anyone paying attention could see it for what it truly was, a last-ditch effort to paper over the growing economic and political disaster his trade tariffs had created. The markets reacted immediately, and not in the way Trump had hoped. Within minutes, social media lit up with memes, jokes, and outright mockery. Financial analysts labeled the move bizarre and inappropriate. Major news outlets ran headlines questioning why the leader of the free world would insert himself into an investor crisis with such a hollow gesture. The investor reaction was even more brutal. Instead of stabilizing Tesla's collapsing stock price, Trump's vow sent it spiraling further. Many saw it as confirmation that the administration was out of ideas, that the White House's strategy had failed so badly, the president was now resorting to personal publicity stunts. On Wall Street, seasoned traders whispered that when a president has to publicly buy a company's product, it signals not strength, but desperation. The political optics were even worse. Trump's so-called support drew attention to the fact that Tesla's crisis was, in large part, a consequence of his own trade policies. It was an admission that the tariff war he had unleashed was backfiring in spectacular fashion. And behind closed doors, Republican governors and political allies were no longer laughing. But Trump's own political allies weren't laughing. Republican governors and unions revolt over Tesla meltdown. As the fallout from the trade war and Tesla's collapse grew worse, the political ground beneath Trump began to crack. Governors from key Republican states like Michigan, Texas, and Florida, who had long stood shoulder to shoulder with the president on economic policy, broke ranks. Their loyalty evaporated when the financial pain reached their own constituents. In Michigan, the heart of America's automotive industry, the governor issued a scathing statement condemning the tariffs. The factory closures and layoffs triggered by Tesla's crisis were devastating the state's economy. Thousands of auto workers, many of them Trump supporters, found themselves out of a job. Local economies in Detroit, Grand Rapids, and Flint teetered on the brink as the ripple effect spread. The governor of Michigan, who had campaigned on promises of economic revival, was now under siege from unions, local businesses, and voters demanding answers. Texas, too, saw a dramatic shift. As one of the largest producers of raw materials for Tesla's vehicles, the Lone Star State felt the sting of the trade war deeply. The governor publicly criticized the tariffs for crippling the state's economy and forcing Tesla to halt production in Austin. Ranchers, suppliers, and factory workers flooded the state capital with protests, blaming Washington's policies for their sudden financial ruin. Even Florida, far removed from the assembly lines of Detroit and Austin, joined the rebellion. The state's lucrative tourism and hospitality industries were already suffering under Canadian and European boycotts, but now Tesla's meltdown added fuel to the fire. With thousands of Tesla employees and subcontractors in the state facing layoffs, the Florida governor demanded that the administration reconsider its trade war strategy. The political fractures extended beyond governors' offices. Auto unions, which had initially been split on Trump's economic agenda, unified in opposition. Massive protests erupted outside state capitals, auto plants, and Tesla dealerships. Union leaders accused the administration of sacrificing American workers in a reckless trade war that had spiraled out of control. The chant of "Save our jobs" echoed from Michigan to Texas to California, a clear sign that Trump's support among blue-collar workers was crumbling. And while politicians argued, Tesla's factory floors fell silent. Tesla's operational collapse. Tesla wasn't just losing money, they were losing the ability to build cars. As political leaders fought over tariffs and trade policy, the real consequences of the crisis played out on Tesla's factory floors. By late March of 2025, the company's production operations in Germany, California, and Shanghai were in free fall. In Germany, Tesla's flagship Giga Berlin plant ground to a halt. The 70% decline in sales across Europe left the factory without orders to fill. Thousands of workers were sent home indefinitely as assembly lines shut down. Supply chain disruptions caused by retaliatory tariffs left the plant without essential parts. What had once been Elon Musk's pride, Tesla's bold European expansion, had now become a liability too costly to maintain. California was no better. Tesla's Fremont plant, once the symbol of America's electric vehicle revolution, faced mass layoffs. Parts shortages, soaring material costs, and a sharp drop in consumer demand forced the company to slash shifts and lay off over 10,000 employees within weeks. Entire neighborhoods that had thrived on Tesla's growth found themselves economically devastated overnight. Meanwhile, in Shanghai, Tesla's factory struggled under the weight of rising tariffs, increased logistical costs, and declining Chinese demand. Production delays mounted, costs soared, and more than 5,000 workers were laid off by the end of March. And while workers were losing their livelihoods and factories shuttered, Tesla's global competitors saw an opportunity, and they moved fast. And while Tesla struggled to stay alive, rivals were seizing the opportunity. Rivals strike. As Tesla's empire crumbled under the weight of Trump's tariffs and Elon Musk's political blunders, rival automakers in Europe and China executed one of the most aggressive market offensives in modern automotive history. In Germany, Volkswagen capitalized immediately. With Tesla's sales collapsing by 70%, Volkswagen ramped up production of its electric ID series, offering steep discounts and government-backed incentives that made Tesla's models look overpriced and outdated. German consumers who once waited months for a Tesla Model 3 or Model Y now found better deals on locally built tariff-free alternatives. France's Renault and Stellantis followed suit. They flooded their home markets with affordable, incentive-backed electric vehicles, aggressively courting the very consumers who had turned their backs on Tesla. In Italy and Spain, similar campaigns painted Tesla as an unreliable, expensive American import, while local brands position themselves as stable, affordable, and patriotic. But the real offensive came from the East. China's Build Your Dreams and NIO, already growing rapidly, seized Tesla's weakened position to expand their European footprint. Leveraging generous local partnerships, price advantages, and production efficiencies, Chinese automakers offered European consumers a new wave of stylish, affordable electric vehicles. Build Your Dreams launched aggressive advertising campaigns in Germany and Norway, directly targeting Tesla's former customers. By April of 2025, Tesla's market share in Europe had collapsed to its lowest level in over a decade. The company that had once dominated the global electric vehicle market was now bleeding customers, losing ground to both old rivals and rising newcomers. The competition was not just eating Tesla's lunch, they were feasting on the company's entire business model. And while the rivals fueled the panic, Tesla's global network was falling apart. Supply chain nightmare. Trump's tariffs didn't just hurt Tesla, they dismantled its global supply chain. When the administration imposed sweeping tariffs on imports from Canada, China, and the European Union, Tesla was one of the first American companies to suffer the consequences. Unlike traditional automakers, Tesla's business model depended heavily on a fragile, cross-continental network of suppliers for batteries, chips, and specialized raw materials. The tariffs sparked a devastating spike in the cost of essential components. Lithium, nickel, and cobalt, key ingredients in Tesla's battery production, became significantly more expensive overnight. Semiconductor chips, which were already in short supply, were now subject to heavy import duties, driving prices even higher. Tesla's cost structure, once optimized for global efficiency, began to collapse under the weight of protectionist policies. The shipping crisis followed. With trade wars raging, global shipping lanes became unpredictable and costly. Tesla's supply chain, which relied on the seamless movement of parts between North America, Europe, and Asia, was thrown into disarray. Every vehicle produced at Tesla's gigafactories in California, Texas, and Berlin became more expensive to build. Delivery delays mounted and production targets were missed. Profit margins evaporated. By April of 2025, analysts estimated that Tesla's average production costs had risen by more than 20% compared to the previous year. Every new Model 3 and Model Y rolling off the production line carried a hidden cost, one that consumers would soon be forced to bear. And while Tesla fought to survive, the American public was ready to revolt. Public protests erupt at Tesla dealerships. Tesla dealerships became ground zero for nationwide public rage. It began with small demonstrations outside a handful of showrooms, but quickly escalated into a full-scale consumer revolt. Across the United States, angry customers, workers, and union members gathered outside Tesla locations, holding signs that read, "Price hikes destroy families," and "Tesla betrayed American workers." The reasons for the protests were clear. Tesla's vehicle prices had surged dramatically due to the tariffs and collapsing production margins. Factory layoffs had left thousands of workers without paychecks. Small businesses that relied on Tesla's ecosystem, suppliers, contractors, and service centers, were shutting their doors. American families already struggling with inflation could no longer afford the electric vehicles that had once symbolized innovation and prosperity. Union-led demonstrations added fuel to the fire. The United Auto Workers and other labor groups seized the moment to call out not only Tesla, but the broader economic policies driving the crisis. They accused the Trump administration of sacrificing American jobs for political leverage. Media outlets covered the protests around the clock, amplifying public anger and putting Tesla's brand at the center of a nationwide economic debate. And Wall Street was preparing the final blow. Tesla's credit rating slashed. The last straw wasn't political. It came from the heart of American finance. In late April of 2025, two of the largest credit rating agencies in the world issued a joint downgrade of Tesla's credit status. The message was brutal. Tesla's financial outlook was unstable, and its debt was now considered high risk. This decision triggered an immediate chain reaction. Institutional investors, who were legally bound to hold only high-grade corporate bonds, began offloading Tesla's debt and equity at record speed. Hedge funds piled in to short Tesla's stock, betting that the company's valuation would fall even further. Retail investors, many of whom had once idolized Elon Musk, watched helplessly as their portfolios bled red. By the end of the month, Tesla's market value had plunged below $500 billion for the first time in years, a staggering fall from its peak of over $800 billion just 1 year earlier. The company that had once been the crown jewel of American innovation was now seen as a cautionary tale of corporate overreach, political interference, and market hubris. But this wasn't just Tesla's collapse anymore. The entire global economy was feeling the shock. Tesla's collapse rattles world markets. When Tesla's stock plunged by more than 53% in less than 3 months, it was not just a blow to one company. It became a financial earthquake felt around the world. For years, Tesla had been viewed as a symbol of technological dominance, American innovation, and the future of mobility. Its rise had lifted markets, inspired copycats, and reshaped global investment strategies. But when that empire crumbled, the shockwaves reached far beyond Wall Street. In Europe, where Tesla had once dominated electric vehicle sales, the company's collapse sent stock exchanges into a tailspin. Markets in Germany, France, and the Netherlands reacted immediately to the sales data, showing a 70% decline in Tesla deliveries. Automotive stocks across the continent tumbled, dragging down suppliers and infrastructure firms tied to Tesla's expansion plans. Governments that had once relied on Tesla's investments in gigafactories and green energy projects were now reassessing their economic strategies. Asia's markets were no less shaken. In China, Tesla's fall sent a clear signal to local investors and competitors. Companies like Build Your Dreams and NIO saw their stock prices surge as investors shifted their bets away from Musk's crumbling empire. South Korean automakers, long wary of Tesla's market dominance, began accelerating their own electric vehicle investments, seizing the opportunity to fill the void. Japanese markets, always sensitive to global auto industry shifts, saw a sharp drop in related sectors as uncertainty spread. Emerging economies too felt the tremors. For years, Tesla's supply chain had stretched across dozens of developing nations, providing jobs and growth in sectors like lithium mining, chip manufacturing, and shipping. But as Tesla slashed production and canceled orders, those economies faced sudden shortfalls. From South America's mining towns to Southeast Asia's semiconductor hubs, the message was clear. The golden age of American-led electric vehicle dominance was over. Global stock markets grew increasingly unstable. Investors across continents dumped not only Tesla shares but also related technology stocks, fearing that Tesla's collapse signaled deeper cracks in the American economic story. Major indices in New York, London, Tokyo, and Frankfurt all saw weeks of volatility as analysts debated whether this was an isolated event or the start of something much bigger. But the fallout did not stop there. As the markets trembled, investors themselves began running for the exits. But the investor flight wasn't over yet. Tesla's golden age ends. The very investors who once treated Tesla like a golden ticket were now abandoning it in droves. For years, institutional funds had flooded billions of dollars into Tesla stock, confident that Elon Musk's vision and the company's meteoric growth would deliver long-term rewards. That faith evaporated almost overnight. Major institutional investors, mutual funds, pension funds, and hedge funds began liquidating their Tesla holdings at a historic pace. Fund managers who had once defended Tesla's sky-high valuation on financial television were now quietly exiting their positions, citing structural risks and political exposure as reasons for the sell-off. Their departure sent a clear signal to the market. Tesla was no longer considered a safe long-term bet. But it was not just the big players pulling out. Retail investors, the everyday people who had once believed Tesla was their ticket to financial freedom, were devastated. Many had poured their savings into Tesla shares during the company's meteoric rise, convinced they were part of a technological revolution. Now, they were watching their portfolios crumble. Billions of dollars in household wealth were wiped out as Tesla's share price continued to tumble week after week. The company's long-term projections were slashed across the board. Analysts who had once predicted Tesla would lead the global auto market for decades revised their forecasts downward. Ratings agencies issued warnings about Tesla's creditworthiness, citing declining sales, rising costs, and political instability. For the first time in over a decade, Tesla was no longer being treated like the future of transportation. It was being treated like a cautionary tale, and the consequences went far beyond balance sheets. As investors fled and stock values crashed, the real-world impact of Tesla's collapse began to hit American workers. And it wasn't just investors who suffered. Millions of American workers were now paying the price. The labor fallout. While investors mourned their shrinking portfolios, it was America's workforce that bore the real cost of Tesla's meltdown. The collapse of the company's market value and sales figures translated almost immediately into mass layoffs, factory shutdowns, and shattered livelihoods. Auto unions across the country erupted in outrage. In Michigan, Ohio, and California, thousands of workers found themselves out of a job as Tesla slashed production and closed facilities. Union leaders, who had long warned about the dangers of Musk's erratic leadership and the volatility of relying on a single corporate giant, now had their proof. Strikes broke out at Tesla-affiliated factories, with workers demanding compensation, job guarantees, and an end to the trade policies that had fueled the collapse. The numbers were staggering. More than 300,000 American jobs were directly affected by Tesla's contraction. Assembly line workers, parts suppliers, logistics companies, and even service technicians. Entire communities that had once benefited from Tesla's rapid growth were now facing economic ruin. Local governments scrambled to provide assistance as unemployment lines grew longer. In Washington, the political fallout escalated. Congressional hearings were launched to investigate the collapse. Lawmakers from both parties demanded answers, not only from Tesla's leadership, but also from the Trump administration, whose tariffs had triggered the chain reaction. For many, the crisis had become a symbol of reckless economic policy, corporate arrogance, and political short-sightedness. The American dream of green energy jobs, technological leadership, and middle-class prosperity had turned into a nightmare. And yet, the question hanging over the nation was even bigger than Tesla itself. And now, the question everyone feared was on the table. The big question. Tesla's fall was not just a corporate crisis. It was a reflection of something deeper. The structural damage to the company's global position was undeniable. The trade war that began as a show of American strength had instead crippled one of its most iconic brands. Tesla's factories were shuttered, its sales decimated, its stock value obliterated. But the larger question was whether the company or the country could ever recover. Consumer trust had been shattered. In Europe, Tesla's brand image had suffered irreparable harm after Musk's political fights and public outbursts. In the United States, customers were furious over skyrocketing prices, production delays, and broken promises. The company that once stood at the forefront of the green revolution was now viewed by many as unstable, unreliable, and overhyped. Investor confidence had evaporated. Wall Street analysts no longer treated Tesla as a future tech leader, but as a risky bet teetering on the edge of collapse. The once unthinkable scenario, Tesla becoming a cautionary tale, was now being discussed openly in boardrooms and financial newsrooms. And behind it all loomed the lasting impact of tariffs and political conflict. The Trump administration's protectionist policies, intended to safeguard American industry, had backfired spectacularly. Instead of protecting jobs and innovation, they had triggered an economic chain reaction that cost hundreds of thousands of jobs and shattered one of America's most valuable companies. As the dust settled, one question remained. Had Tesla's golden age come to an end, or was this collapse just the first domino in a much larger shift, the end of American dominance in the global economy? Let us know your thoughts in the comment below.